Welcome back, everyone, to the deep dive. Today, we're going to be tackling something a little bit different, something that I think a lot of our listeners have been asking about, and that is IPO investing.
Oh, yeah.
So we got a whole bunch of research here that you sent over, and we're going to kind of try to dig into what really matters for someone like, someone like you who's listening right now, who's thinking about getting involved in this kind of thing.
Yeah.
By the end of this deep dive, you're going to have a solid grasp on the process. You'll know how to spot those red flags everyone talks about, and even have some ideas about specific ETFs to explore further.
Yeah. It's a fascinating area, to be sure. It's not just about, picking the next hot stock.
Right.
It's about understanding the whole life cycle of a company going public.
Okay. So before we get ahead of ourselves,
Yes.
let's kind of rewind to the beginning here.
Right.
What motivates a company to even do an IPO in the first place? It can't just be for the stock ticker symbol next to their name, right?
Definitely not.
Evidently.
At the end of the day, it is primarily about raising capital.
Right.
Getting a huge influx of cash to fuel expansion, research and development, marketing, all that good stuff.
Yeah.
But it's also a publicity play.
Yeah.
Becoming a household name overnight.
Mm-hmm.
And of course, for founders and early investors, it's their chance to cash out,
Right.
turning their stake into actual dollars.
Right. So there's a lot going on behind the scenes, even before we see that initial public offering price.
Absolutely.
So it's not all champagne and confetti, is it?
Oh, no.
There's got to be some serious prep work going on.
Oh, yeah. Absolutely. And that's where those mysterious underwriters come in.
Right.
Usually big investment banks.
Okay.
They're the ones valuing the company, setting that IPO price, and basically vouching for them to the market.
Right.
This is where things can get really nuanced because that valuation process,
Right.
it isn't an exact science.
Means that the price isn't always right, huh?
Exactly. And that's just the tip of the iceberg when it comes to the risks that we'll dive into.
Yeah.
But before we get into all of that, let's talk about what smart investors should be looking at when an IPO catches their eye.
Right.
What's on that due diligence checklist?
Yeah, it's got to be more than just, looking at the website and liking the logo. Right?
Way more.
Yeah, huh?
First off, dive deep into the business model.
Okay.
How does this company actually generate revenue?
Right.
And more importantly, is it sustainable?
Right.
Are they relying on one product, a fad, that could disappear overnight?
So you're not just betting on what they're doing now, but you're thinking about
Exactly.
their ability to adapt and grow in the future.
Exactly.
Okay.
Then we look at their financial performance. Are they already turning a profit, or is this a bet on future potential?
Right.
Both can be valid.
Yeah.
But you as an investor need to know which game you're playing.
Mm-hmm.
And this is where, really digging into those financial statements becomes crucial.
Okay, so no relying on just the, marketing hype.
Right.
We got to see those cold, hard numbers.
For sure.
But, even a company with great financials can still, go belly up if the market shifts. Right.
You're getting it.
Uh-huh.
The competitive landscape is key here.
Right.
Who else is vying for those same customers? What are the barriers to entry?
Right.
Can someone just copycat their product easily?
So looking for those moats, those unique advantages that set a company apart.
Yep.
But even with all of that, there's one factor we haven't touched on yet, and that's the people in charge.
Right. The management team is absolutely crucial.
Yeah.
What's their experience?
Right.
What's their track record? Have they taken other companies public before?
Yeah.
You're not just investing in an idea.
Right.
You're investing in the people executing it.
And that can be tough to gauge, especially with these, younger companies.
Absolutely.
It's almost like a gut feeling on top of all this hard data.
Yeah, there's definitely an element of that. But there's also a lot of publicly available information you can dig into.
Right.
Court filings, previous company records, even just media interviews can reveal a lot about how leadership operates.
Okay, so our checklist so far.
Yeah.
Solid business model, good financials, competitive advantage, and a strong management team. That's a lot to consider.
It is.
But let's say a company checks all those boxes.
Okay.
Are we good to go? Is it time to buy?
Not so fast.
Oh.
We've still got two crucial factors to consider.
Great.
Growth prospects and potential risks.
Okay.
Growth prospects were all about looking beyond the current numbers.
Right.
What's the trajectory of the whole industry?
Okay.
Are there any trends, like new technologies or shifting consumer behavior that this company can capitalize on?
So even a company doing great now
Right.
could be in trouble if they're not prepared for what's coming next.
Exactly.
Right.
And on the flip side, even a struggling company could be a great investment
Yeah.
if they're perfectly positioned for a future boom.
That's where those crystal ball skills come in handy, huh?
More like thorough research and analysis.
Right.
And speaking of potential problems, we have to talk about risk.
Right.
Every investment has downsides. And IPOs are no exception. I mean, one of the biggest ones with IPOs is you're dealing with a relatively young company.
Okay.
They don't have decades of, financial data to pour over. No battle-tested strategies. It's a lot more projection
Right.
than proven track record.
So you're placing a bet on their ability to execute, not
Exactly.
just what they're doing right now.
That's right.
That adds another layer of uncertainty, doesn't it?
Absolutely.
Right.
And that lack of historical data kind of feeds into another major risk.
Yeah.
Volatility.
Right.
IPO prices can swing wildly.
Oh, yeah.
Especially in those first few weeks or months of trading.
I've heard horror stories of people, losing their shirts on a hot IPO that just fizzled out. Is it always that dramatic?
Not always, but the potential is definitely there.
Oh, okay.
And you got to remember, a lot of that early price action is driven by sentiment,
Right.
not just fundamentals.
Yeah.
Media hype, social media buzz, it can all create this frenzy that inflates the price
Right.
beyond what's reasonable.
And that frenzy works both ways, right?
Oh, for sure.
A couple negative headlines could send the price plummeting.
Precisely. And that volatility is amplified by the fact that there's often an information gap with IPOs.
Okay.
They haven't been under the microscope of analysts and financial reporters for years.
Right.
So the data you have to base your decisions on is often limited.
So it's like navigating uncharted waters.
Kind of, yeah.
You need a strong stomach and a willingness to do some serious digging.
That's right.
But even if you're comfortable with all that risk, there's still the question of access.
Yeah.
How does someone like you listening
Right.
even get a piece of that IPO pie?
That's a great question.
It's not as easy as, buying shares of Apple or Microsoft, is it?
You're right. It can be tricky.
Okay.
Some brokerage accounts offer IPO access, but it often depends on, your account size,
Right.
your relationship with the firm,
Right. So it's not always a level playing field.
It's not always a level playing field, unfortunately.
So what are the options then for the average investor who wants to get in on the ground floor?
Well, there are specialized platforms
Right.
that focus on IPO allocation for retail investors.
Okay.
They essentially pool together smaller investments to get access that wouldn't be available individually.
Gotcha.
But it's crucial to do your research on these platforms.
Okay.
Their fees can vary widely, and their allocation processes aren't always transparent.
Good point. Okay, so let's say you've done your due diligence,
Right.
found a platform you trust, managed to snag some shares at the IPO price.
Okay.
What happens next?
Well,
Are you free to sell them whenever you see fit?
not so fast. This is where those lockup periods come into play.
Ah, yes, the lockup periods.
Yeah.
We touched on those earlier.
We did.
But let's unpack them a bit more.
Yeah.
Why do they exist in the first place?
Well, imagine what would happen if right after an IPO, all the company insiders,
Right.
the founders, early investors, employees, suddenly dumped all their shares on the market.
Yeah.
The price would tank.
Yeah. That would not be good
No.
for anybody.
Right, so lockup periods prevent that.
Okay.
They usually last anywhere from 90 to 180
Oh.
days
Okay.
and basically restrict those insiders from selling their shares.
So it's a way to kind of stabilize the market,
Exactly.
protect early investors
Yep.
from a sudden price collapse.
That's the idea.
But isn't that also kind of artificial? Like, it's not a true reflection of supply and demand if a big chunk of those shares are essentially locked away.
It's definitely a factor to consider.
Yeah.
That lockup expiration date becomes a key event to watch because it can create volatility.
Right.
When those shares become available, there's potential for a sell-off if insiders decide to cash out.
So it's like a mini cliffhanger for investors.
Yeah, you could say that.
You're holding your breath, wondering what's going to happen when those shares are unleashed.
It could definitely add to the drama.
Yeah.
And this all ties back to the point we made earlier
Right.
about the importance of having a long-term vision. If you're investing in an IPO based solely on the potential for a quick flip,
Right.
those lockup periods can really throw a wrench in your plans.
So it sounds like patience is key in this game.
Patience is key in a lot of investing,
Yeah.
but especially with IPOs.
But let's be honest, not everyone has the time or the expertise
Right.
to be, picking individual IPOs.
Sure.
Is there a way to get exposure to this market without having to do all that legwork?
Absolutely. And that's where ETFs come into play.
ETFs,
Yes.
those baskets of stocks that let you kind of spread out the risk a little bit.
Diversify, exactly.
It seems like there's an ETF for everything these days, so I'm not surprised that there are some that focus on IPOs.
Pretty much, yeah.
So what are we looking at here?
Well, there are actually quite a few options,
Okay.
each with its own, approach and target market.
Mm-hmm.
Our research highlighted 5 in particular.
Okay.
First up, the Renaissance IPO ETF, ticker symbol IPO.
Okay.
This one aims to track the performance of the Renaissance IPO index,
Okay.
which includes newly listed companies across a range of sectors.
Okay, so a broad approach.
Exactly.
Casting a wide net to capture a variety of IPOs.
That's the idea.
What else is there?
Another one is the First Trust U.S. Equity Opportunities ETF,
Okay.
ticker symbol FPX.
Mm-hmm.
While not exclusively focused on IPOs,
Okay.
this ETF includes them as part of its strategy.
Okay.
It seeks to capture the performance of companies that have recently gone public
Gotcha.
or are expected to do so soon.
So a bit more of a blend, but still with a significant IPO component.
Exactly.
What about the others?
We also have the Invesco Dynamic IPO ETF,
Okay.
ticker symbol IPO.
Mm-hmm.
This one tracks the Dynamic IPO Index,
Mm-hmm.
which selects and weights IPOs based on factors like fundamental growth,
Okay.
valuation, and risk.
So it's a bit more discerning in its approach,
It is.
using those criteria to pick and choose.
That's right.
Interesting. So less about just chasing the newest listings, more about finding those with solid underlying potential.
Exactly.
What about the last two?
We've got the ProShares IPO ETF, ticker symbol IPOS. This one mirrors the performance of the IPOX 100 U.S. index, which comprises 100 of the largest and most liquid IPOs in the U.S. market. So if you're looking for exposure to those bigger, more established, newly public companies, this one could be worth a look.
Interesting. So kind of a blue chip IPO ETF focusing on those that have already made a splash.
Yeah, you could say that.
And the final one.
Last but not least, we have the iShares US IPO ETF, also with the ticker symbol, IPO. This one's similar to the Renaissance IPO ETF, tracks the Renaissance IPO index, providing broad exposure to newly public companies in the U.S. market.
Hold on. We already talked about an ETF with the ticker symbol IPO. This is where it gets confusing for investors, isn't it?
It can be.
Multiple ETFs tracking the same index, even sharing the same ticker symbol in some cases.
Yeah, it definitely highlights the importance of looking beyond just the name or the ticker.
Right.
You really have to dig into the prospectus, understand the ETF's specific methodology, its expense ratio, and any nuances in its holdings.
Right, because even though they might be tracking the same index, there could be subtle differences in how they're constructed or managed,
Exactly.
which can impact their performance.
Absolutely. And this ties back to what we've been saying throughout this whole deep dive.
Mm-hmm.
Whether you're looking at individual IPOs or ETFs that hold the knowledge is power.
Right.
Don't just jump in based on, hype or a hot ticker symbol.
So for our listeners out there, what are the key things to remember when it comes to IPO investing?
Well, first, understand the motivations behind a company going public.
Yeah.
It's not always about, some groundbreaking business model.
Right.
Sometimes it's about existing investors cashing out.
Right. Follow the money.
Exactly. And once you've, found an IPO that interests you,
Yeah.
due diligence is crucial.
Yeah.
Go beyond the headlines and marketing fluff.
Right.
Scrutinize their business model,
Mm-hmm.
financials management team, growth prospects, and potential risks.
Mm-hmm.
And remember, the information available on IPOs is often limited
Right.
compared to established companies.
Yeah.
You have to be comfortable with a certain level of uncertainty.
And even if you love the company,
Yeah.
don't forget about those pesky lockup periods.
Oh, yeah. Those can come back to bite you.
Those expiration dates can create a lot of volatility. So, factor that into your strategy.
Absolutely. And for those who want exposure to the IPO market without the headache of picking individual stocks, ETFs offer a great alternative.
Right?
But just like with any investment, do your research understand how the ETF is constructed, what index it's tracking its fees, and how it fits into your overall portfolio?
It sounds like IPO investing is a bit of a balancing act.
It is.
The potential for high rewards is definitely there, but so are the risks.
Absolutely.
It's not for the faint of heart, but for those willing to do their homework and stay informed. It can be a really exciting way to participate in the growth of these, innovative companies.
Well said. It's about finding that sweet spot between calculated risk and informed decision-making.
Well, I think that's a perfect place to wrap up our deep dive into IPO investing.
Sounds good.
We hope you found this exploration informative and insightful. And as always, remember the IPO market is constantly evolving.
Oh, yeah.
So stay curious, stay informed, and as always, happy investing.